Hello, everybody. Welcome to Monday. The S&P 500 was down 0.3% today. For those of you who've been following this show for quite some time, we've been talking about what happens at the end of a quarter. And we've also been talking about recently what happens at the end of a quarter or beginning of the second half of the year. And they both can be quite different. So, for example, you have all of these big, target date funds. They're really targeted towards certain levels of equity and bonds, international, et cetera. And so at the end of the quarter, they'll tend to rebalance back to those. So if you have a situation where the stock market has gained a lot more than the bond market, that probably means those target funds have a bit more on a percentage basis, in the stock market than they might want. So they sell back down to their targets, and then they're buying whatever was under targets, which in this case, in my opinion, would probably be bonds. So we've had quite a few sell-offs, kind of into the last week. Usually end a couple of days before the quarter ends, like the 28th instead of the 30th. They tend to do a little bit early, I believe. And so, it's not something to be too concerned about. We saw it at the end of March. We saw it at the end of last year. Last year, for example, ended on the 28th of December, and then the market started taking off. And so you kind of have to be careful with what you're kind of attaching to what's happening here. I find it kind of amusing that the news still attaches all these different things to these downturns that are happening here, at the end of these quarters, even though, it's sort of a structural thing that happens behind the scenes. Now, at the beginning of the second half of the year, July, as we've been talking about, is actually the first half of July is the best half of any month in the year, going back to 1928. And again, what's happening here is that you have a lot of different passive investing concepts that are out there that tend to buy stock. The expectations will see actually billions of dollars of money come in this year into the stock market from that concept. So, and they buy that beginning in the second half, kind of. So you kind of have this one piece that's going to drive the market down a little bit, and another piece that drives it up. So, we'll see what happens. We've also, had a heck of a run. NVIDIA is down 13% from its high as of today. That's going to probably stimulate some buying at some point in time, but it's just up so much, 100+%. Really almost quarter after quarter, the way things have been going here. But I think it was up about 140% this year before it started to pull down. And so, that's just part of the stretch. That's normal. There's some profit taking going on as far as that goes. The earnings actually are still outpacing the growth of the stock. So there's some potential for the stock to come back and do well here as far as that goes. But even then, even if it just, sold off a fair amount, you still have a really good gain in the market from NVIDIA. We're going to need some other leadership to come in, and we'll have to see where that comes from. But I think probably we'll see some buying coming into NVIDIA, if nothing else, because when the passive investing starts to buy at the beginning of July, they buy, these big indexes that are market cap weighted, and, NVIDIA is in the top three, as far as market cap goes. So it's going to capture a lot of assets just from that. So, it's not a bad time to be investor. Market's still very healthy. Again, the basics are there. We've got, lowering inflation, Federal Reserve talking about lowering rates, good earnings, artificial intelligence. You also have over $6 trillion sitting in money markets still. If the Fed starts lowering rates, that'll bring the rate down on these money markets, and probably start to see some flows coming in from money markets into the stock market also. It also shows you that the retail investor is still not fully bought into this. And, that's going to be kind of fuel on the fire, so to speak, to drive this forward. This is how these big bull markets work, these big up markets. You kind of start off, short covering, and it slowly builds up. And then pretty soon, you kind of end up in a situation where everybody's in, it's all exhausted, all the money's in that's going to come in. And that's when things go the other way. But it tends to be kind of in that 3 to 5 year range past the bottom, which was in October of 2022. So we're still kind of early, at least in that run. Again, anything can happen in terms of what can interrupt a bull market. But if we kind of look at kind of the basics for what's going on here, there's some good, reasons the market could do well. Still keep in mind constantly that we can still have 10, even 15% downturns in the middle of a really good market. Last year is a great example, 10% downturn from July 31st to October 27th, even though the market, ended up over 25% for the year. So sometimes you have to come down to stimulate buying. I suspect that's what's happening with NVIDIA right now. It might come down a bit more before really get a bunch of buying, but then that buying comes in, it's kind of everybody jumps on board and the short sellers get knocked out. And all of a sudden, you end up at an actual higher place than you were before. So that's sort of how it works. Anyway, look forward to being able to see you tomorrow, and we'll see what happens then. Thank you very much.